Hello everyone. Today we are with Kishor Ostwal ji. He is CMD for CNI Research. We are with him since more than a decade now, and we are very glad he is with us today. How are you, sir?
I'm absolutely fine. And Chetal, it
So,
is nice every time we meet, we give something new to our viewers.
right, very right.
Yeah.
तो किशोर जी
Yeah.
पहले थोड़ा आपकी कंपनी के बारे में बता दीजिए लोगों को.
CNI Research is a listed company, and we are partnering with Bloomberg, Dow Jones, Reuters, Capital IQ, FactSet, ISI Emerging Market, Wakabayashi, and many more international agencies, Blue Matrix, etc., etc. We provide research broadly to FIIs through these platforms, and more than 3,900 FIIs read our research reports. And we have a credit of creating more than 100 multi-baggers in last 2 decades. This is a short brief. I am by profession is a chartered accountant. I was associated with Tata House earlier, Bombay House, as a chartered accountant. Then I moved my career into research because I found that a lot of lot of people only cover large cap research, and there is a big vacuum in small cap research. So we decided to enter into this area, which has become more profitable to our viewers. So today we have 26,000 members, and they are benefited from this small cap research.
Okay, sir, what is happening in the current market?
I think churning. I would put it one word is churning. Churning, it is, you can say it is global churning or vis-a-vis Indian churning. Now, when Chinese market was shut in the first week of October or last week of September, FIS sold around $8 billion. And the message was clear that they are moving that money to China market. Of course, we have always a bad record of China. They earlier entered China at 20p and exited at 10p. So whenever they enter China, it's nothing that they are not investing in stocks. They are basically giving money to the government of China. So I don't see any futile exercise of moving that money from India to China. But this is what these hedge funds do, because hedge funds are only for 5-10% gains. So they have moved China. I don't know whether they could get an opportunity to invest in China, because before they invest in China, Chinese market crashed 14%. So I really don't know whether they could invest in China or not. Now, this is one issue where the money has probably says flown back to China or moving out of India. But the other reason for this sell-off, which I consider is churning within India. Churning within India. What they are doing is that this is a different animal. You must first know. A lot of people try to chase what FIIs are doing, and every time when you chase FIIs, you are going to stuck very badly. Like they can buy at Bajaj Auto at 13,000. You can't buy. I was recommending Bajaj Auto 3,500, and nobody was liking that time. Now at 13,000, if you like at 5x, then in A group, any bad news or any bad comment, 30% downwards is practically is happening everywhere. RBL also we saw yesterday it was 20% down. So this is going to happen in A group stocks. So bottom up approach, those who are following bottom up stories, bottom up stocks, bottom up approach, they will not lose money. Now, coming back to FIIs, what they are doing. No, every day they have been seller in India. 1 month back, the position of FBI in futures was 4.65 lakh contracts long. Today, they have turned out to be 1.90 lakhs contracts short. So historically, once we reach 2 lakh contracts short, they will have to start covering, and market generally go up by 5 to 7%. We have reached that stage now. So very soon, I can't say that today or tomorrow, but very soon we should see a 5 to 7% upward move in Nifty. Okay, even RSI is supporting that. RSI has now come down below 40, and whenever RSI is below 40, we consider market is as oversold, and then the short covering starts. Now, why are FIs selling? Why suddenly they sold $10 billion? One factor was China. But I really don't know whether they could invest in China, but they have invested somewhere else. What they are doing, they are selling shares on the open street and they are buying anything offered to them, even if it is dirty. For example, they have put in 27,000 crore in Hyundai IPO. Hyundai IPO, if you compare with Tata Motor, it's shit. I would say it is a shit IPO. 27 price earning ratio, and the money is not going into manufacture. Entire 27,000 crore they have took away and they have taken in Korea. And another 15,000 crore they have taken dividend just ahead of IPO. I mean 42,000 crores. That is equivalent to $5 billion. Now, a company which has been taking away from $5 billion from India to Korea, and we are still saying, no, it's a good company. We should invest in that company. Where is the growth coming in from that company if the money is going out of India to their country? It should be rather the reverse case that they should have put in $5 billion in India, bringing in from Korea. Then definitely it would have been a case to invest in India. Now FIs are putting in money. If you see the anchor investors, 80% money has come. 8,500 crores has gone to anchor investor, except ICICI Bank, ICICI, all other are foreign investors. So what they are doing, they are selling here and buying there as an anchor investor. And similarly, they are putting in other IPOs also. A lot of anchor. So around, my opinion, around 70, 80,000 crores they are putting into FPI IPOs, and another 1.5 lakh crores is lined up in QIP. Now, on the one hand, they say no, Infosys result is not good. They are selling Infosys, but they are buying anything and everything which is offered in bulk in the QIP, whether it is good or bad or ugly. But that is a trend. Maybe, I don't know, some other economics might be working behind it. Like, I don't know whether they get a fees or don't know, or they get something to subscribe to that. Since there is no evidence, I can't say that, but they are doing that. So otherwise, there is no logic that I sell Infosys and I buy Indigo. What is the fun in it? Indigo is at the highest valuation, but in block deal, I buy Indigo. I buy Sudarshan, which is, it's going to go bust because after taking over this Hubach is a bad asset. And Hubach itself failed because they acquired Clarion. If Hubach, a Germany company, cannot manage a German company, how an Indian will go in Germany and manage a German company? I don't understand. So they are buying. Whatever. They say that the asset is there, there's opportunity is there, but they are putting. So it's a question of marketing gimmicks, and somebody markets well, so they buy it. So whatever is the consideration, but they are selling here and they are buying here. So money is getting circulated. So neither the money is going out or the money is there. So in fact, FIs are now sending a signal that they are as poor as like us. Rather, our DIs are better. They don't have money to put in they don't have new money to put in Indian markets. So DI is getting 25,000 crore a month. DI is getting 25,000 crore. That is a $3 billion, and they are investing. And they are happy that FIs are selling. So that is what I said. Market is falling. FIs selling. I am happy.
Just on money is
So
also going in
I
gold.
explain current market situation as well, where market is going. Both the questions I have answered here. Yeah.
Yeah, but I'm saying money is also going in gold. Gold is just picking up.
No, it's a gold. Gold is a different class of investors only. So gold has nothing to do with the stock market. Equity investor doesn't invest in gold. I have been investing in equities, but I never tried to invest in gold or silver. Though I am bullish from to 8,000 rupees. Even today, I am bullish on gold. Gold will cross 95,000. Silver will cross 1,14,000. But that doesn't mean that I will invest. Percentage-wise, the returns in equities is much higher than gold and silver.
Do you feel the current company valuations are pretty high and this was expected? This can
No,
also
not at
be
all.
one
Not
of
at
the
all. Not
reasons.
at all.
No?
This is no. This is again a thought process. Whenever market corrects, only this valuation question comes. When it was 86,000, nobody was talking that market was expensive. Why they are talking that markets are expensive at 81,000? after correction of 5,000 points. So 86,000, they were saying market is changing, huge liquidity is changing market. So valuation even that time was not bad. Even valuation today is also not bad. Now what they play all sort of gimmicks. Now I read some report where they have compared 15 years average price earning ratio with current price earning ratio. So current price earning ratio is higher than 15 years average price earning. They're just saying valuations are expensive. But why? Who has defined that 15 years average come? You should take an average of 30 years, 33 years, because we started growth in 1991. From 1991, today it is 33 years. So 33 years average is 25 price earning ratio. Today we are trading at 20.7 price earning ratio. So we are almost at 20% discount. So our price earning ratio is very comfortable. Now, what would you say that when we were trading at 42 price earning ratio, that time market was not high. Now, as compared to 42, you are feeling hit at 20.7 only because sudden market has suddenly surged. You are saying this. So market did not outperform for last 2 years because of war, geopolitical concerns, whatever reasons. But that off late that catch up. Some of the grounds they have recovered. And since the recovery was sudden, you are saying the valuations are expensive. Valuations are not expensive. Now let us compare Nifty, Dow, and S&P, because I would not restrict myself to only Indian markets. Dow is trading at 31 price earning ratio. Where is growth is higher? Where growth is higher? Growth is higher in India. India GDP is 7.5. US GDP is less than 3. India earning growth is 20%. US earning growth is 3 to 4%. Still, Dow is trading at 31 price earning ratio. India Nifty is trading at 20.7 price earning ratio. S&P is trading at the 28 price earning ratio. So you take any exchange or any indices for that matter, in my opinion, Nifty is the lowest. And therefore the valuation is not expensive. And this is a created move. When they want everyone to sell, they will always talk about high excess valuation. And once selling is done, they will rig up the market to 86,000 again, and they will say, now valuations are very comfortable, high liquidity is chasing. So these are things. And secondly, the factor in that we are now almost 4 months away of ending the financial year. So we should really talk about price earning ratio of March 26. If I take that into account, our price earning ratio is less than 18. 18 price earning ratio, you can't see a big downfall. So valuations are comfortable. Yeah, only thing, sometimes you have an extra love for A group shares, and there is the market cap, the prices might go up and down. Like Reliance, after announcing bonus, also it crashed 11%. Why? That could be for treasury operation. There could be some other reasons. Now, on 28th October, when they announced the record date is there, probably after record date, stocks start moving up X bonus. Who knows?
Right. Sir, which picks you would like to give for Diwali?
I would certainly recommend certain A group shares, and for bottom-up stories, I would recommend sector-wise. I would not go stock-wise, sector-wise. In A group, probably I will recommend Reliance as my best bet as of now, because I'll give the rationals also. On 20th October, it is going X bonus. The record date is there. The stock price has corrected post announcement of bonus and bad results. Generally, on bad results, stock bottoms out. So going by that reason, Reliance is the best bet at current market price. And within next 2 or 3 months, I am expecting a possible demerger of Jio and retail. That should add a lot of value to Reliance. So there is a fair probability that we can earn 50% in Reliance in next 12 months. So Reliance will be definitely my first bet. Then in large caps, I have only few bets like Reliance, then Tata Power, BHEL, Tata Motor. These are my best bets. But in some mid caps cash segment, I have few good bets like Niles India. They are trading at 2,500 rupees, but they are the one of the best company in lithium battery chemical. Then Investment Precision Limited, they are in titanium casting. And this is the only second company after PTC. PTC trades at 15,000-16,000 rupees, but
Yes.
Investment Precision at 850 rupees. So, and they have also said that they are US defense company. In their balance sheet annual return, in the chairman's speech, they have clearly written that they have procured a registration from US defense. So, being a defense story, Investment Precision sounds well. Then third company is Forbes Limited. Forbes Limited is having 300 acres land, including 48-acre land of Swadeshi Mills. Swadeshi Mill land is at Siam. So if we compare, currently that stock is available at 1,000 crore, and Bombay Dyeing got 5,200 crore for half of the land at Dadar. So you can understand how underpriced this stock is. Again, this stock belongs to Shapurji Palanji Group. And Afcon IPO, another company of Shapurji Palanji is coming out with an IPO of 8,500 crores. That is Afcon IPO. Afcon
Yeah.
Infra
It is
Project.
currently, yeah,
So,
it's currently listed.
yeah, so that if that get valued at 40-50,000 crore rupees, then Forbes can't trade at 1,000 crore. So this is a direct correlation, same promoter, same group, same business. So if that is trading at 50,000 crore, might well even this should go up. So 1,000 crore, this cannot sustain for a long. It's a great opportunity. Also in the new website, they have said that they are entering into defense in a big way. So again, being a defense story, I think Forbes is a good story. Then next stock, I would say that KPT Industries. It's a Kirloskar Group company, a very small company, tiny company, but they are into e-rickshaw and e-autos, also engineering. But good numbers. So valuation is very cheap. So, and Kirloskar Group is a very strong group. So one can look at KPT Industries. Then another is BBTC, Bombay Burma. Bombay Burma, we actually issued report yesterday only. Bombay Burma is a holding company of Britannia. Britannia trades at 1,30,000 crores. So by that standard, this company should trade at 35,000 crore at least, 25% of the being a holding company. But it's trading at 16,000 crores. So I'm seeing 100% upside in BBTC. So these are the good stocks I would suggest. But then I go for sectors. Sector wise, then my first sector will be, which is most undervalued sector and ignored sector in India, is packaging. Packaging.
Yeah.
What I understand, packaging. What I understand is India is becoming a semiconductor hub. Now, if India is becoming a semiconductor hub, packaging will be the first sector which will get biggest boost. And also, you know, you are seeing expansion in this retail segment like Amazon and Swiggy. All these are growing very, very fast. So, and the consumer choice also changed. The packaging industry, which has been neglected for years, is not getting proper valuation, should get a proper valuation. So in packaging, I have some stocks like MB, RDB Rasayan, Shetron, and Hindustan Team. These are the four stocks which I think are good in packaging. Then, of course, I'm looking at textile sector as a new sector where government has announced that they want to see 16x expansion in this sector in next 5 years. Now, 16x is not possible without PLI and without government support. So there, I think there is few companies like Mapatlal Industries, Reba Textiles, Lahoti Overseas. I am extremely bullish on these stocks. One can look at in this sector. Then there are three, four more sectors I'm looking at. One is OSV, offshore support vessel. This sector is a blinder. The capacity occupation is almost 100%. And there is a new player which has entered in market in oil exploration is Sun Petro. There are already few players like Reliance is there, Vedanta is there, ONGC is there, Hindustan Oil is there. The fifth company which is now entered is Sun Petro, and they're very aggressive. It belongs to Sun Pharma Group. Now, looking at the expansion in this sector, I feel the support vessel sector is also will grow, and the only company in this segment is the Global Offshore Limited. Global Offshore Limited. There's only one company which is there in that segment. Earlier, they were working for Total, British Petroleum, British Gas, etc. Now they are working for ONGC, Vedanta, and probably since Sun has entered now, so they might tie up with Sun also. Then in chemicals, I have one company identified is Vipul Organic, which can do well, and it is come rights. They have announced recently right at 54 rupees, and current market price is 285. So there is a good opportunity to make money through rights issue. People can buy now. Record date is not announced. They can buy now and uh, enter into the rights issue. Then comes is engineering and food. Food. In food and engineering, there is one company which has recently been approved by NTPC and NHPC. Apart from Bale and Larson and Bosch, etc., and that is a GTV engineering. I think this is a very bright future. Company's earning is excellent, and they are also into railways. So that seems to be a good choice. And there is another company which I am expecting in FMCG segment is MK Exim. They are into cosmetics. You know better than me. There is no recession in cosmetics, and they are a debt-free company. Debt-free company, so it will never be affected by recession. So the growth is there. The largest spenders are women, so the company will keep on growing.
So that way,
And
even we
lastly,
can talk about the fashion companies. There are many companies which are into that. So
they
they
are
will also
highly
be
valued.
growing.
I am comparing to that. Nykaa is trading at 50,000 crore. Trent is trading at 1,20,000 crore, 1,30,000 crore. This company is trading at 350 crores. Whenever I recommend some stock, I am trying to see that risk element is how much. So if my bottom-up approach clearly suggests that if you don't want to take risk, you should enter into smaller companies where risk is not there. That is why I picked up this company, not bigger company.
Right, right.
In railway, I have one pickup that is Integra Engineering. Integra Engineering, that is into railway, purely railway, and it is a multinational, again available at just 800, 900 crore rupees. It's a Swiss multinational. And they are directly connected with Metro, Vande Bharat and Vande Bharat Metro. So I think one can try here also.
Okay. Which other sectors you feel we should look for in coming next year?
I think I have
Because,
covered this. I don't want
yeah,
to
you
go
have
into what
covered
public says bank.
extensively. Yeah, you have covered
I don't
extensively.
want to see banks. I don't want to see IT. I don't want to see FMCG. I don't want to see pharma because everybody is invested there. You should invest in the companies where people have not invested. After 10x, they will come, you sell and let them enjoy. Like, I was recommending Sera Sanitation at 90 rupees. Now it has become 40,000 rupees. Now, what is the fun that I recommend again Sera at 40,000? No point. Domestic
Very true.
consumption story. Let others invest. Let VIP had covered at 34 rupees, 10 rupees paid up. Today it is 702 paid up, money 3,500. I can't recommend that stock now. Let people enjoy.
Okay. Overall, how you feel about the markets with India becoming more stronger?
See, today we are getting a 25,000 crore SIP, and in 2 years' time, I think this figure should cross 40,000 crores, just less than 2 years. And all policies, if you look, SEBI policies, government policies, finance ministry's policies, they are all meant to divert the money from retail's direct invested to mutual funds. So ultimately, mutual fund is the only face. And finance ministry is on record number of times saying that we don't care about FPI. We are here to that our domestic investors are saving market, our domestic market investors are good, they are great, and I will subscribe to her views. So with 50,000 crore, that is $8 billion a month, $5 billion a month, nobody can beat in India. FIs cannot dominate anymore.
Yeah, that's true because we are seeing so many more investors every single day, and every single day new data is coming that we are topping up. So, and another very nice data is that women are now more into this working class. They are more into businesses, which earlier was not there. So, spending power is increasing.
Correct.
So,
My
luxury.
target for Nifty is 40. My target for Nifty is 47,000 in 2029.
Okay, that's a
So we
great
have
target.
to keep that in mind. And I have not, if last 20 years, I have not failed in Nifty projection. So I believe that I will not fail even this time. So keeping in that mind, if you make investment, probably you will earn better.
Which luxury brands you prefer to invest in?
No luxury brands,
Okay.
only MKXA. I
Okay.
will go. I am not interested in Amitabh Bachchan. If I have to make a movie and I hire Amitabh Bachchan, he will probably charge me 100 crore rupees. Same movie I can do with Mithun Chakravarti for 5 crores, and but still I can make it a hit. So better I will go with Mithun Chakravarti. That is low value stocks.
That's nice one. Okay, so anything else you would like to share with us?
I think investors should one culture I've seen is very different culture. That is, people think they have become educated because a lot of material is available on online. A lot of reports are there. TV media is there. A lot of anchors have become analysts. Now that's very surprising. When anchor gives opinion, I get the first thing shock in the morning when I see anchor recommending a stock. How can anchor be an analyst? If anchor is analyst, then my role is not there in stock market. Very true.
Very
So
right.
lot of people, what they have been doing off late is that they are trying to hear, learn, listen, and they are converting the herd mentality and they are converting into their own opinion, and that's how they are going into wrong calls. They are not studying themselves. So whatever have been thrust on them, they will hear. I mean, now what is somebody saying the market will collapse? So they have been selling left, right, center without even trying to understand what is the price earning ratio. Let's sell or sell. Why you want to sell it? So if you apply your mind, you learn yourself, then you will make big money. And when markets are bad, you must buy.
Very true. But for that, you need money in hand. People are already invested, they don't have money in hand. Most of the times, it's like that with everybody. So they're stuck.
So that is also a wrong call. Basically, you have to plan your affairs in such a way that you have to always calculate that market is going to correct 20% and keep money with you. If you don't do that, it's very bad situation for you. Then you'll always get stuck. And leveraging, I would always say that leveraging is the last choice. You should never leverage. And F&O, though I have a very good, pretty strong strike rate in F&O calls, I would still maintain that F&O is not our cup of tea because you get over leverage, and then for meeting mark to market in F&O, you have to sell some of the cash stocks in losses. That should not happen.
Right.
I'm
Sorry,
telling you,
tell me.
every market, bad or good, every market gives you opportunity. Every market, whether it is bad, it is good market. But if you have sense, if you have proper thinking, if you have proper calculation, you can buy good quality stocks and still make money.
Very true. What do you want to say about IPOs?
I generally avoid IPO because uh, this is a 5 6 merchant bankers which have defined. They have come some cartelization. They have done it, and they are creating IPOs. And most of the times, people are losing money out of. And even investors, they are buying IPOs only for IPO listing gains, not for long-term investment.
Very true.
And when you are
So,
having a for like for if you compare Hyundai and Tata Motor is available at 9 price earning ratio. Why would I buy Hyundai at 27 price earning ratio?
right.
So when in the secondary market, you have a lot of opportunity, and I would focus only on secondary market, not on IPO.
Okay. Thank you, Kishore ji, for your precious and valuable time and all the information you have shared with us. It was really nice
Thank
talking
you.
with you. Okay, sir.
Thank you.
Thank you.